Louis, thanks for coming in. Could you start by giving us a quick overview of Cerillion, your products, your customers, your markets, and so on?
So Cerillion provides enterprise software for telcos, and this is essentially mission critical CRM and billing software. We say mission critical because it's the software that telcos can't do without. They need this software to connect their customers to networks, to charge for their usage of those networks, to send them bills, collect payments, prepaid, postpaid, contracts, non-contract, etc. So at the core of what telcos do. And alongside that, we also have a software as a service solution, which we call Cerillion Skyline. And that's targeted not just at telco, but across a very broad range of other verticals, so other utilities, and also areas like financial services, digital media, government, etc.
Cerillion is a relatively small player competing against real industry giants such as Amdocs, CSG, NEC, Netcracker, and so on. Can you talk a bit about how you compete with those industry giants?
Sure. Well, actually, the number of independent players who have a full range, full breadth of full fat enterprise stack is actually quite small. And once you go past Amdocs, who clearly the industry leader, but who tend to focus on much bigger telcos, the top 20 or 30 in the world or whatever, and then Oracle, who are an enormous company with a fairly large telco practice. There isn't a huge amount of other competition that can do that full range of product delivery, from everything from taking data off telephone networks, connecting customers, charging, billing, etc., etc. So I think first of all, it's not as crowded a space as you might think, but also because we're very small, we're competing against the giants in a sense. We can be a lot more focused and a lot more agile. I mean, we just do this thing, whereas Oracle have many things. And even Amdocs have a much broader range of things beyond CRM billing and enterprise software for telco. But as I said, we're much more focused and we can make decisions more quickly. We haven't got 24 layers of management, etc., etc.
So a key plank of your strategy is to expand your footprint outside of telecoms to utilities and so on. Can you tell us a little bit about how you're going to go about doing this?
Sure. I mean, we're taking this. This is new for us. So we've only just launched this product at the end of last year. So to start with, we're looking relatively close to home. So at utilities companies, and we're talking about electricity, gas, water, where we do have a small a smattering of customers, but we see that as being particularly a pretty good place to start for software as a service, because it's relatively close to telco, but also it's more straightforward than telco, so it's more amenable to this software as a service approach. And the thing to bear in mind is that with the software as a service solution, we're taking a relatively narrow slice of our overall functional footprint from the enterprise world and focusing purely on charging and billing. But we're also looking at everything from delivery businesses to so publishing. We've got 2 customers, for example, in publishing, a subscription for publishing publications, and that's a very simple billing concept. And of course, the beauty of having a relatively narrow slice of the functional footprint is we don't need a lot of domain knowledge to go in and sell that. Whereas in telco, because we're covering the whole gambit of what telcos do, we need a lot of knowledge about telco to do that. So it's about trying to be more narrow, more focused, and know what we know, but not try to be experts in every.
So you've stated that you do plan to drive growth inorganically as well as organically. Can you tell us about your plans and how you're going to go about driving inorganic growth?
Sure. So I think with organic growth, there's a limit to the speed one can grow out in enterprise software, because it requires the addition of more people to deliver the services that are required to deliver more and more enterprise software. So we've addressed that to some extent with software as a service, which requires a much less linear increase in people to increase in revenues. But I think to make big leaps, we're going to have to do inorganic growth and acquire other businesses. And this is something we have a little bit of experience of, in that last year we bought a a small unit out of Ubisense, another AIM-listed company based up in Cambridge. And this was to plug a gap in our functional footprint in network inventory, essentially software that manages where the cables are in the ground in telecoms operators. And I think we can do more of this. We can find more add-ons that don't, niche pieces that don't fundamentally change what our core is, but give us more reach out into the same customers, but across more of their requirements. And I can see that being a key part of our strategy over the next 2 or 3 years.
So what are the key milestones that investors should look for in Cerillion in your first year after IPO?
Well, I think, as a friend of mine said, priority 1 is deliver the numbers, meet market expectations. Priority 2 is deliver the numbers and meet market expectations. But if you move beyond, meeting the numbers and so on, really getting our software as a service solution motoring and winning more customers, establishing more proof points in different verticals is a number 1 milestone, I guess, for us this year. Also, adding more customers in across our regions in enterprise is always a priority. So that's obviously a focus. But I think if there was one thing to point to, it would be really getting some momentum going in the software as a service space.